Have you ever looked at your 401k and wondered how some standoff happening halfway across the world can make it feel like it's on a wild roller coaster? Well, that's exactly what we're breaking down today. We're looking at a crazy day in the markets where the threat of war got wiped away by a single sentence and triggered a massive 900-point rebound. All right, let's get into it. These 9 words, that's all it took. This quote from President Trump to CNBC was the exact moment everything turned. This simple line was enough to pull global markets back from the absolute brink. But to really get why these few words were so incredibly powerful, you have to understand the fear that was gripping the entire world just moments before. So first up, the brink of conflict. Before this major pivot, the mood was, to put it lightly, pretty bleak. Tensions between the U.S. and Iran had hit a boiling point, and you could just feel investors everywhere bracing for the worst. The entire financial world was on a total knife's edge. And when I say spiraling, I mean it was a sea of red ink everywhere. From Tokyo to London to New York, traders were just glued to their screens, watching in horror as values plummeted. The one emotion driving everything? Pure, unfiltered uncertainty. And you can really see that fear right here in the data. Asian markets, tumbling. Investors were ditching what we call risk assets, things like stocks, and running for safer options. Even the U.S. dollar was getting stronger, not because the economy was great, but because when things get chaotic, people flock to the dollar as a safe haven. On top of all that, stocks were already on a 4-week losing streak, and then Iran comes out and directly threatens anyone buying U.S. government debt. I mean, that's a serious escalation. And look, this wasn't just numbers on a screen or abstract financial jitters. This was real-world stuff. We had confirmed reports that over 40 energy assets in the Middle East had been severely damaged, which sent absolute shockwaves through the global energy supply chain. And this was the climax. A 48-hour ultimatum had been issued related to the Strait of Hormuz, which is this critical choke point for a huge chunk of the world's oil. A ticking clock was literally counting down to a potential military showdown, and the markets were just holding their breath. Okay, Section 2, the pivot. Just when it felt like things were about to go completely off the rails, the whole narrative shifted. A 5-day pause suddenly appeared, offering a lifeline and a chance to just cool things down. So with the world bracing for impact, this message of diplomacy just cuts right through all that tension. Now, it wasn't a peace treaty or anything permanent, but it offered something even more valuable in that moment, a break from the crippling uncertainty.
The announcement itself was actually pretty simple. The U.S. was going to pause any potential strikes for 5 days. And the reason they gave? Well, they said the talks between the two countries had been productive. And that one word, productive, was huge. It suggested this wasn't just kicking the can down the road. It was a real signal that maybe, just maybe, there was a diplomatic way out of this.
And the reaction from the financial world? Well, there was no delay. There was no, let's wait and see. It was immediate, it was massive, and it was overwhelmingly positive. Which brings us to the rebound. What happened next was basically a 900-point sigh of relief. It was one of the most dramatic turnarounds you'll ever see, and you could practically feel the collective exhale across the trading floors. This number just says it all, doesn't it? A 900-point jump in Dow futures. Now, futures are basically bets on where the market is going to open, so this gave us a powerful early signal of just how relieved investors were. This wasn't a small bump. This was a rocket launch, fueled entirely by the hope that a conflict could be avoided. And this wave of optimism wasn't just happening in the U.S. As you can see, European stocks immediately bounced back. The yields on U.S. Treasury bonds, one of the safest investments on the planet, started to drop, which means people were selling those safe assets to get back into stocks. And the prices of gold and silver, another classic safe haven, started to ease. The entire global financial system just did a complete 180, all at the same time. All right, next up, the ripple effect. With a potential war brewing in the world's most critical energy region, you can bet the biggest ripple was felt in the price of oil. And it started to tumble. This slide breaks down the psychology of it perfectly. On the left, when you have conflict fears, you worry about supply getting cut off, so prices surge. Traders add what's called an uncertainty premium. It's like an extra fee for not knowing what's going to happen. But on the right, as soon as you have hopes of de-escalation, the supply outlook stabilizes, prices fall, and that risk premium, it just vanishes. And that's exactly what we saw happen in real time. So, let's get to the big takeaway here. Why did the market cheer so loudly? I mean, why would a temporary 5-day pause cause such a massive positive explosion? Let's break down the lesson.
It all comes down to this one concept: geopolitical risk. It's the technical term for the fear that was driving everything. That 48-hour ultimatum was the definition of geopolitical risk. It threatened to blow everything up. The 5-day pause, even though it was temporary, dramatically lowered that risk.
You can literally trace the whole event like a roller coaster ride. It starts with escalating conflict, which spikes investor fear. That fear leads to a huge sell-off. But then you get that sign of de-escalation, the pause. Confidence starts to creep back in, and that fuels a massive rally. It's a perfect chain reaction of fear and relief. So here's the bottom line. The one thing to really take away from all this: markets can handle good news and they can handle bad news. What they absolutely cannot stand is uncertainty. They hate not knowing what's coming next. That 5-day pause was like hitting a giant reset button. It gave everyone a moment of stability to just breathe and reassess, instead of panic selling. And that, it turns out, was more than enough. And that, of course, brings us to the final thought. The market's relief was real, and it was powerful. But a pause is, by its very definition, temporary. Which leaves us with the billion-dollar question that every single investor was asking: what happens on day 6?